We're here with Peter Hugg of Kitco Metals. Peter, thanks for being in the studio with us today.
You're welcome, Joe.
Well, let's jump right into it, Peter. We're looking at gold. It did not have a great week last week. China was out of the game. What are we seeing this morning?
Well, I think we're seeing a bit of support from the Chinese coming back into the market yesterday and this morning. Friday was a perfect storm. You had 4 or 5 fundamental news stories, such as the CFTC indicating speculative positions were increased, the World Gold Council suggesting that supply and demand equations for gold were less favorable in 2012. Some of the big names in the industry, such as Soros, lightening up on their gold positions, and traders taking advantage of the 1625 and 1600 puts. They were long, and they took the market down and took their profits.
Yeah, it wasn't a great day on Friday.
No, it was scary, and I think what we needed to see and what we did see on Monday and somewhat this morning was the Chinese stepping in and buying the gold on the dip.
And so what do you think that might mean for this week moving forward?
I'm still skeptical on the market. Before I became aggressively long this market, I'd want to see gold close solidly over 1625. On the short term, technically, this market still looks weak with support initially at 1597.
And one quick thing, you just mentioned Soros. A lot of these fund managers had reduced their positions. What do you think this means for the yellow metal?
Well, that doesn't mean they're right. I mean, they had a long position. They're reducing some of their position. From what I understand, most of the bigger players, such as Soros, still see the long-term uptrend in gold intact, but they're fairly nimble. And if they see a $100 move in their direction that they can take easily off the table, they'll do it.
Well, Peter, thanks so much for being in with us here today. We hope to have you back in our studio in New York, and take care.
Thank you, Joe. You're welcome.